Bestie besties, welcome back to the channel. If you're new around here, welcome. And if you are a returning subscriber, thank you so much for coming back. I do appreciate all of you guys being here. You're not seeing my face today, and I'm actually making a video right after this where you're not going to see my face either, but that video will come out next week. But I have about 30 minutes or so to do two videos, and I don't have time to edit, so I'm not going to include my face or anything fancy. We're just going to have a conversation. So please make sure you like, share, and subscribe. Check out my playlist if you are new to the channel. Check out some of my previous videos if you have questions about like our dividends and all that. I do share a lot of that information here along with our real numbers. So today we're going to be talking about our investing strategy. I get this question a lot, and I think, you know what, I'll make a video about it, a dedicated video about it. And it's really simple. I'm all about simplicity over here. I'm all about, keeping my strategy as simple as possible while I'm focusing on building wealth. And we're going to talk about our investing strategy today. So I'm going to just go on and get started. I'm in Canva, and we're just going to like get us moving. Okay. So in our investing strategy, and again, I'm not a financial advisor. I am not a fiduciary. Like I said, I do share real numbers, which, let's be honest, is really, not, popular. But again, I'm a visual learner. I need to see what people are doing, because with investing, you can and lose will money listening to the wrong people, following the wrong advice, going down the wrong path. Trust me, I've done it. And I've learned a lot from Warren Buffett and just a lot of the big investing people who have been on this journey for a while. I'm on year 9 of this. And so understanding what dividends are is so important, because a lot of people get into dividends and dividend investing, not understanding what it is. A lot of people get into dividends trying to chase yields or trying to chase profits, and the company is trash. You want to make sure that whatever you are investing in, you understand and you believe in. You should understand what a dividend is. If you don't know what a dividend is, let me bring you over to a quick slide that I have that I'm going to show you guys. This is from a dividend course that I made, and I'm actually working on something, not a dividend course, but more like another workshop that we're going to be able to really really talk about what dividend investing is from a beginner, from an average person's standpoint. But basically what a dividend is, or what dividend investing is the act of investing in a company via a stock or a fund with the hopes of receiving regular cash payouts as a reward. Okay. So when you are getting a dividend, you are getting piece of their profit. Okay. Now remember, when you are dividend investing, because they're paying you a profit, they're not putting that money back into the company. They're not investing in more money into innovation or services or bringing on new management, because they're, paying out a piece of dividend. So you want to make sure you understand that dividends are a part of the company's profit that they're paying to you. But when you invest in good companies and into good funds, those companies and funds can handle paying out a dividend and continuing to grow or continuing to keep the dividend momentum going. And so that's one thing that my husband and I really, really look at when we are talking about, dividend investing for our specific strategy. Okay. And another slide I want to show you guys real quick is that dividend companies or funds, there are thousands of them. I mean, there are so many dividend companies and dividend funds, or dividend stocks and dividend funds on the market. Our goal is not to invest in every single one. Like, you guys may have some dividend stocks or funds that we may not have, and we may have some that you may not have. The objective here is just to buy and hold what you believe in. We do not day trade or short dividend stocks or funds. We are investors. We are not traders. Well, at least my husband and I are. We're not traders. We are investors for the long term. Hence my name, Mommy Trader. I'm trading in bad financial habits for good, financial habits, for generational wealth, for financial independence. That's what the Trader and Mommy Trader stands for. Though it is kind of cool when you hear Mommy Trader. But, I'm really, really am focused on understanding what dividend investing is. And you see some of my favorite websites down here for research. It's so important when it comes to dividend investing. But yes, back to this slide. It's so important to understand what dividends are. You have to make the time to research. I have a dividend workbook. I have a dividend tracking book. I have so many videos on this channel talking about dividend investing. I have a beginner investing playlist with a lot of beginner friendly dividend videos in it. Take the time, make the time to just explore my channel. You'll find a lot of content geared towards the beginner, but it's so important to understand what dividends are. So I'm going to scroll down, and I'm going to come to the second part of our strategy, and that is the dividend snowball. So you guys probably have heard of Dave Ramsey, right? And the whole debt payoff snowball. Well, it's kind of the same method a little bit. And with the debt snowball, you kind of you work on your smallest debt, you pay your minimums on your other debts, but you focus on the smallest debt and you throw every extra penny to that smallest debt so you can kind of pay it off fast. And then you kind of move to the next debt that you have. You still pay your minimums on your other debts, but you take that next debt, the next debt that you have, and throw all of your extra dollars to that to help pay it off faster, get that momentum going. Well, with dividend investing and the dividend snowball, it's kind of the same underlying strategy. You focus on a few dividend stocks and funds that you like, and you just build, build, build. You guys hear me talk often about your share size. What is your share size goal? Don't spread yourself too thin because you're not going to see the growth. So it's much better, honestly and statistically, to invest in like 3 or 5 dividend stocks or funds versus 50, because you'll see the progress much quicker when you start off really, really slow, okay? And so again, I want you guys to understand that you don't have to have a whole bunch of dividend and stocks and funds when you first start out, because we don't. And I'm going to show you guys how we track it in our spreadsheet in a second, so make sure you stay tuned for the rest of the video. But I love the dividend snowball because you can see the compound interest. If you focus on, let's say, 3 dividend stocks and funds, and you just build your share sizes up. I'm going to bring you to one of my favorite websites right here. I'm going to adjust the screen. This is tipranks.com, a really, really good website, but I brought this up because you can actually see the dividend snowball in action. So let's say you type in realty income, okay? So we type in realty income right there. It puts all the information in for you. The current share price, let's say you have, for, video purposes, 25 shares. Your total investment amount is about $1,274, about, right? We're just estimating here. Let's say you want to hold this for 5 years, okay? Let's say you expected your dividend yield is around 6%. This pays out every month. So really easy and beginner friendly. Let's say your annual contribution is $1,200. So that means every month you're putting in $100, right? $100 times 12 months is $1,200. We're going to put dividend tax rate because yes, you have to pay dividend taxes on dividends. We're going to put about 15%. You're buying and holding, so you're probably going to be paying less than that, but you want to consult your own tax person for more detailed information. Let's say we expect this to grow by 3%, and we expect the annual share price to increase by 3%, and we always turn on that drip. Let's calculate the returns and see after 5 years, we'll have $9,094. Do you guys see compound interest? Look, you're starting out with your 25 shares, and every year after that for 5 years, $1,200. That's $100 a month. Look at this. Almost $10,000. And look at this total dividend payment in that 5 years is $1,427. So again, it's so important to understand how the snowball method works when it comes to dividend investing, because it's really not as difficult as you may think. Go to that website. I'll have a direct link to it below. And it's free to sign up. And you can go and play around with a bunch of other stocks and funds to see, like, if you consistently invest, let's say with $50 over the span of, let's say, 5 years or 3 years, how much you'll probably have in terms of estimates, okay? Let's come down to the third one. Slow and steady and heavy when possible. That's my motto. Slow and steady and heavy when possible. Slow because you don't want to jump in head first. A lot of people like myself jump into dividend investing head first, and you're chasing yield. You're doing it the wrong way. And so remember, slow and steady always win the race. Steady because you want to be consistent. That's our strategy. You guys know I'm a creature of habit. I will post videos often about what we bought and how we bought it. How much did we put in? Because consistency is your friend on any investing journey, especially dividends. And then heavy when possible. Look, tax refund, if you're talking about a raise, if you come under budget in your groceries or a bill, throw those extra dollars into the market. You can invest with fractional shares, $2 in Fidelity, $5 in Robinhood, $1 on Cash App. There really is no excuse for no one to not be investing nowadays because of fractional share investing. Remember, the average Social Security payment is about $1,500. Now ask yourself, do you think that'll help you, let's say, in 20 years, 30 years, 40 years from now? So again, slow, steady, and heavy when possible is like so important. I can't stress that enough, guys. Let's come down to point number 4, and I just spoke on this a little bit, but start small. You don't need to jump in, like I said, with 50 different dividend stocks and funds. We do not start out that way. You guys know, once we get to a share size goal, I move on to something else. But I don't move on to something else until I meet that goal. Set your goals, okay? Sorry, guys, I had to make sure that my laptop was plugged in. But yeah, fractional shares rule. Like, I'm serious, guys. If you have any type of platform, they all probably do fractional share investing right now. It's a game changer. So, get your position set up, whatever you believe in, whatever you like, and slowly build up to your first share. Then 5, then 10, and 15, 25, and 50, so on and so forth. And you'll be surprised at the progress. Let me show you so far how much we made year to date. Look at this, guys. This is our 2023 dividend progress year to date, just on our taxable accounts. We're focused here because we're trying to retire early. Now, we do get dividends in an HSA, a Roth, all that type of stuff. But again, that money is for long-term future. But I want to focus on realistically what we could live on when we do retire early. So that's a part of our strategy, is really getting our dividends and our taxable accounts up, 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 up. And so I'm so excited to share with you for October what we made. But year to date, from January to September, about $5,700 and about 5,700 bucks if you just round, maybe 57, 58. But you can see the exact number here. But again, this is what we are doing all of this for in terms of investing, okay? But small shares absolutely, absolutely help. And then the final part of our dividend strategy is just to track our progress. I mean, this is probably the fun part to me. I know some people don't like it, but I like to see how our money is working for us. I'm just being honest with you guys. I like to see how much we're making doing nothing. Like, bought the security and just held it. This is compound interest, kind of moving for you. And I'm actually going to bring up my dividend spreadsheet to show you guys. So let me bring it up now. So you guys see it here. This is one of, oh my goodness, maybe 18, 19 spreadsheets. I'm a spreadsheet girl and I track everything down to the cent because this is our money at work. This is compound interest at work. This is our dollars at work. I didn't have to get up and go to a job. I didn't have to, in terms of getting the dividends. Now, I did have to work, my husband and I, to put money in, but outside of that, all the dividends that you just saw on that previous slide year to date, I did nothing. I literally just bought it and just lived my life. And so it's always nice to see the dividends come in, but you got to track it so you know what you're doing, your progress. It forces you to check in. You should always do a portfolio update because let me tell you, things can change. Like the market can change. You may think that, hey, one company is doing good and et cetera, et cetera. And before you know it, that company may have paused this dividend. Management may have left. I mean, the company could file for bankruptcy. You just never know. And so I track everything here, just a simple, spreadsheet in this workbook that I have. I'm just showing you just one of the spreadsheets because it allows us to see how our taxable accounts are doing. I have to update this once a month, but we're at about maybe $160,000 now because of what we put in. But I want to show you just the tracking again. I don't track this every day. I don't have to, I don't want to make it tedious. But every month, just come in and update what we did and what we didn't do, what positions we added, what positions we sold, anything along those lines. And this is just dividends. This is not like anything that does not pay a dividend. This is just dividends and the sectors and all that good stuff. But again, you can see up here just our goals and just all that good stuff that we have planned. But again, you don't know where you're going if you don't plan it, if you don't write it down, if you don't put it in a spreadsheet, anything like that, you're just going to find yourself all over the place. So yeah, this is our strategy. Really just 5 simple steps. It's not complicated and you just kind of stick with it. And what happens is that you'll start to see the momentum. You'll start to see the increase in your dividends every single month. So leave me a comment down below, guys. Which of these strategies, which one of these steps resonated with you the most? Let me know down below because you guys know I always love talking with you guys. Please make sure again that you subscribe to the channel. If you haven't liked the video, follow me over on Instagram. Leave me a comment down below. And again, thank you guys so much for watching. And until next time, I'll see all of you in the next one. Bye-bye.